Hello, welcome once again. Welcome to my real estate video podcast. And today's topic is Economics 101 for all real estate people out there. Welcome once again. My name is Si Wing Yi from the Yi Real Estate Network. And today we're going to have a very exciting content-filled real estate information as always. So thank you for attending. And by the way, please click the like button if you see the value of my video presentation, and also subscribe to my YouTube channel. I'm trying to build up my YouTube channel. And also, best of all, if you could, at the end of this video, you could, you know, put down your email, log into our website so you can be a subscribe to our newsletter, weekly newsletters for great free real estate educational contents, and you can have access to some great real estate investment opportunities. So anyway, thank you for attending once again. So this will be nice and quick. So I encourage all of you out there, all Americans, please attend my class. The class is in session, so please have your undivided attention. America, it's time to go back to school and get educated. That's right, grammatically wrong and all that. Educated. I'm having some fun, okay, in this environment. Welcome to my class, Economics 101. Real estate people. Again, my name is Si Wing Yi, otherwise known as Professor Yi. Oops, I'm not an economist or a professor. I just play one on TV. Oops, that's not true either. I'm just a real estate consultant for the past 30 years. And and uh, and also I've been to the quote unquote school of hard knocks. I've been in the real estate trenches. I've been through various real estate and economic cycles in my lifetime. And so I came through the back doors, survived, and thrived. So if I can do it, anyone out there can do it. So Economics 101, basically the answer to that is if demand exceeds supply, housing prices will increase. That is a fundamental truth, at least in the past history. Who knows about the future, right? I don't have a crystal ball. No one else have. It's just we could just understand. We just need to do some study and research and educate ourselves. Look at the trends. Look at the data from reputable sources. And I I highlight the word reputable. I emphasize the word reputable because there are so many organizations out there who are not reputable. YouTubers out there that use clickbait crash videos every single time, 50% crash, 80% crash. Why not say 100% crash? Real estate will go down with zero value, all right? It just blows my mind. All right, here we go. Supply and demand is so simple. U.S. homeowners equity have surged to amazing whopping 27 trillion. And the value of the housing stock surpassed 39 trillion. This is mind-boggling. There's so much money in real estate. Sellers, you are locked in. 9 out of 10 mortgages have an interest rate below 5%. And many of you refinanced during the pandemic 12 to 18 months ago, even less than 3% on a 30-year fixed rate mortgage. Now, for those of you that put in the effort to do that, to refinance your home, you won a real estate lottery. Okay? Because a 30-year fixed rate mortgage at a historical low, it'll never happen again. So this is a precious precious commodity. This is a precious debt without saying. 9 out of 10 mortgages, okay, in the country. More than 40% of all homeowners don't even have a mortgage. That's mind-boggling. They're free and clear for whole amount, massive amount of equity, depending on the value of the house, of course. So they are set for life. Their retirement is set, assuming, a few other things. But imagine someone have more than one house without a mortgage. That's financial freedom de jure. So therefore, homeowners will tend to stay at their homes much longer these days than in the past. So that is the first initial comment I have on the supply and demand curve. Right? Sellers are not selling, and there's so much equity. Anyone that bought during the pandemic in the past 18 months, depending on what market in the country, you have achieved 30, 40, 50, 60, even 100% equity growth in a mere 24 months in some markets, in some sub-markets, not all, right? That is mind-boggling. So this is a one-time historical occurrence. I believe it will never happen again in our lifetime, maybe in your grandchildren's lifetime. So this window of opportunity has just passed us by. Those that took action and bought homes for primary home own occupy or investment homes, not only in the past 2 or 3 years during the pandemic, but prior to that, if you bought in the last 10 years or the upswing of the real estate cycle since the real estate market crash in 2008, you guys won. You guys, gals, you people, sorry, are sitting pretty for your lifetime. So some people are thinking, oh, what about foreclosures? What foreclosures? Most people have equity with certain exceptions. The foreclosures is at an all-time low. So people have so much equity, they don't need to be under stress. They can always sell the homes and still profit from selling of their house. There's no stress sales. Oh, very few that is, right? That's, you know what I mean. Right? And let me see what else. That's it. I mean, because how could housing crash? Because people have so much money in their home. There's no stress, right? If they experience stress in their life, if some people lose their job or whatever, they could always rent out their property, right? They could always rent. You know why they could always rent out their property? Because the amount of renters out there is at a record historic high. There are more people renting right now than ever in history because they are priced out of home ownership due to skyrocketing home prices in the past few years, and the income have not caught up, and the lack of supply, lack of inventory, and the demand so high, especially during the 3% interest rate we experienced recently. But now things have changed, of course. Anyway, some of you complain, right now the mortgage rate is between 5 and 6%, and you guys are thinking, that this is a bad time. We are still at a historical low interest rate environment. Okay, look at 1980s. There were like 18% mortgage rate at that time, and people still were buying homes at that time. So right now, if the interest rate is still low from a historical basis, what's with everybody? Why is that everybody freaking out? Low inventory historically, still moderate to high demand, still interest rate is, historically low. I mean, this should be a normal real estate market, healthy market. It may still be, okay? Still, things that still have to be worked out. But anyway, no, I mean, yeah, the skyrocketing rates from 3 to 6%, whatever, just occur. I mean, and very, very surprisingly. I mean, it's shocking to a lot of people. I call it, quote, shock and awed. AWE, shock and awed. This is a military term. Remember the Iraq war back in the early 1990s when the U.S. military invaded Iraq, and President Bush, the older one, this is shock and awe. We invaded Iraq and ended the Iraqi war. Shock and awe, quote unquote. All right? Anyway, some of you don't remember back in those days, 30 something years ago. Anyway, economics 101, all right? Go back to school. We are short 1.7 million homes per year. We need about 15.5 million homes to be built over the next 10 years. Right now, we need 1.7 million homes per year. We're only constructing around 500,000 homes available this year. So we are not even 1/3 the amount of inventory that we need to achieve an equilibrium balanced market. Almost 500,000 homes projected for this year, 2022, and we need at least 1.7 homes to balance out the market. Now, 4 to 6 months is a balanced market, right? 4 to 6 months, right? You know that. But right now, last month in June 2022, in some markets, in many markets that is, there's only 2.5 months available with inventory. Still a very much a seller's market. Yes, we have seen inventory of homes have risen recently since the interest rate spike. Yes, that is true. Partly because the demand has a pushback. There's not enough buyers out there to absorb the slight increase of inventory. That's why the perception is that the amount of housing inventory has increased fairly dramatically. Not really true, okay? If you take a deep dive into the numbers, it's just people not buying, people are pausing. There's a reset in the market. In a way, it's good, right? We need to go back to a healthy market. We cannot sustain this double, triple, quadruple digit in appreciation. This is not sustainable. So perhaps the Federal Reserve is doing the right thing. By raising the interest rate, it just slows down the inflation and just makes the housing market more healthier, allow for normal market condition to exist instead of multiple offers and bidding wars and 20, 30, 40% above asking price. This is crazy. We need to stop this. Anyway, at the end of the day, moving into the future, I mean, people also have such a tunnel vision. They think they live for the moment. If you look at the big picture, if you look at the future, we still have the millennials, 82 million millennials out there. People between age 30 to age 40 are in the prime home buying years. And yet we are still seeing historical low inventory and still pretty high demand. Look, and then Generation Z, Gen Z, those generation of 86 million people, as you can see down here, who are turning age 30 at the end of this decade. He's only 8 years away. Another 86 million. They will be in the market for buying homes. And we're just not making enough homes. The builders not constructing their homes fast enough. And the people that have properties right now, the sellers are not, many of them are not selling, right? Because they're sitting on an amazingly low interest rate environment. So then baby boomers, like myself, 68 million, all buying rental properties and second homes all over the place. So there's still a lot of demand and there's not enough supply. So At the end of the day, I will release you from my class, Economics 101, in that before you walk out of my class right now, the recap is this. If demand is greater than supply, which is right now, and which is going on right now, and it's not going to change too much anytime soon. It doesn't happen overnight, even when we see an increasing inventory, right? So it takes a while. Everything in real estate takes time to reach its full effect. We're still at a historical low inventory, housing supply environment, and demand still pretty high. All right, so if demand is higher than supply, real estate prices should increase systematically. Maybe a single digit increase is fine. 3, 4, 5, 6% appreciation moving forward. That's pretty realistic and reasonable to think. So some people calling for a crash, for correction, or for a bubble. I would not go that far, right? Say it again. Economics 101, right? You need to learn. You need to get educated, get educated out there. It's not going to happen, right? A past history dictates that. And again, I could be wrong, right? There will be, I mean, it takes a lot to have a crash, right? Take a nuclear war, God forbid, 20% unemployment, or if this upcoming, if there is a recession, if it is a serious, deep recession that can cause the job situation to be severe, then it may happen. But at the current trend that I've seen, the data that I've been studying, again, I don't have a crystal ball, but it ain't gonna happen. So at the end of the day, everybody should take a step back and learn very fundamental truth. Economics 101. If demand exceeds supply, you're gonna continue to have housing prices will increase, albeit slowly. But I don't see a crash, bubble, or correction. Thank you so much. To see what you need from User Network, please click the like button to improve my YouTube algorithm. Subscribe to my channel. I produce weekly videos on all aspects of real estate investing, and for everyone out there, home buyers and investors alike. So thank you for watching. Have a nice day. Goodbye.